48.8, came in a bit higher at 49.7. We go over to construction spending for October, month over month. The expectation was for a rise of 0.2%, came in at a rise of 0.4%. Then we go to ISM manufacturing for November. That expectation was 47.5, came in at 48.4. If you go to ISM prices paid for November, the survey was for 55.2, came in at 50.3. Of course, Paul and Alex are going to break that down in more detail in just a bit, but all eyes really on that jobs report that comes out on Friday. Let's get to the market reaction now. Now we go to the NASDAQ of 0.8%, 157 points at 19,377. We have the Dow down 0.4%, 183 points at 44,726. The S&P 500 up 0.1%, or 7 points at 6,039. The 2-year yield at 4.21%, up 5 basis points. The yield on the 10-year 4.23%, and that's up 5 basis points. The Bloomberg Dollar Spot Index up about 0.6%. We have the Japanese yen, euro, British pound weaker, and Bitcoin down about 1% at 96,000. That is your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa Mateo. Alex Steele here, Paul Sweeney. This is Bloomberg Intelligence Radio. Happy Monday, everybody. Happy Cyber Monday. Happy Shopping Monday.
Sure.
Yeah, why not? Giving Tuesdays tomorrow. Let's keep in mind for that. Let's get more on the manufacturing data, because for the first time in 8 months, new orders entered expansion territory. Joining us for now is Tim Fiore, chair of the Institute for Supply Management's Manufacturing Business Survey Committee, and he joins us now. Hey, Tim, what drove that expansion?
A couple things, Alex. First off, the new order number finally broke 50. I mean, we've broken 50 before in the last couple of years, but we've broken 50 here for a good reason. It feels like demand is starting to come back now that the uncertainty around the election is behind us. That's a good thing. The other thing that validates that is that our manufacturing inventory number actually rose 5.5 points, which would also indicate that companies are more willing to invest in working capital to get ready for the 2025 business year. So overall, a good report. I think the other point here is our employment, although we're still destaffing, we're not destaffing as strongly. You know, we came in at 48.1. So the three of those together got us close to 49. And I'll tell you, if the supplier delivery number, which surprisingly actually got faster, if it had remained slower, we would have broke 49 and gotten closer to 50. So overall, a good report for November, a little bit surprising, a little bit more positive than I would have thought this early, but very consistent with the fact that we're on a rate reduction cycle. The election is behind us. It's obviously going to be a positive thing for the economy, and off we go into 2025.
Tim, great to have you with us. Tim Fiore, chairman of the Manufacturing Business Survey for the Institute for Supply Management, zipping in here with some economic data came in a little bit better than expected, so we'll take that. I wonder how much of that has to do with the election and some of the economic optimism that is felt in a lot of parts.
Well, and also, I wonder how that winds up looking as we go into 2025, because will we see stockpiling ahead of any tariffs as well, and will that change the inventory and new orders? That could be interesting to figure out, too.
Yep, very good. Looking at the markets here, a totally mixed outlook here. The S&P up a little bit, Dow off about 0.4%, but the NASDAQ up. So go figure out what's happening there. We can check it out with Abigail Doolittle, Bloomberg News chief markets correspondent, joins us here in our studio. Abigail, what are you looking at in the marketplace today?
I'm looking at a number of these stocks being moved in different directions by the departures of key executives. 2 CEOs at big companies have left today, including Intel. Pat Gelsinger stepping down as the turnaround has really stalled. That stock down about 50% on the year. And then, of course, Stellantis' CEO leaving as well. Lots of questions about the inventory for that company. And then Supermicro Computer, the CFO leaving. They've done this internal review, and they have found that there's no misconduct, which is similar to what Woo Jin Ho has told me in the past, that he thought that it was just a small company that became very big too fast, and the spotlight was on them. So that stock up 12%, Stellantis down about 7%, and Intel up about 2%. Another stock that has my eye, because the chips overall are higher, Marvell Technology, it's up 4%. It's expanded an AWS pack for AI in the cloud. So lots of the chip stocks actually recovering today.
Yeah, I was trying to think of a moniker like Merger Monday. No, is it like Executive Departure Monday? But that's lame. I mean, I was trying to think of something catchy that started with an M, and Management Monday. I don't know. I couldn't quite get there. What's interesting also is, what are we seeing with the Russell? Are we seeing anything interesting with the small caps? I keep reading lots of notes about the divergence and how we are getting a broadening and breadth of that rally. I think Bloomberg Intelligence noted that a good amount of stocks were over their 200-day moving average.
So it's interesting. The Russell 2000 remains essentially in a range range. At this point, though, and over the last couple of months, it's an upward leaning range. That said, if the range continues to do what the range has done, it suggests that you're going to see the Russell 2000 back down toward the 200 days sooner rather than later. Now, one reason to think it may not go back down into that range is it's actually broken out of an area of congestion. That's probably what has Bloomberg intelligence analysts and maybe her name is escaping me right now.
Gina Martin Adams.
Yes, Gina Martin Adams, particularly excited.
Yep.
And of course, from a fundamental standpoint, this is a big part of the Trump trade. These companies tend to be smaller, more domestically based. And so if his administration is indeed protectionist, and we have every reason to believe that could be the case, that should help out those smaller companies.
Abigail, thank you so much for joining us. Abigail Doolittle, Chief Markets Correspondent for Bloomberg News, joining us here on our Bloomberg Interactive Brokers studio. Market Drivers today is brought to you by IBKR. Financial advisors, switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest at ibkr.com/RIA. Well, the political news today is coming out of France. The far-right National Party of Marine Le Pen will back a motion to topple the French government after Prime Minister Michel Barnier failed to agree to all of its demands on next year's budget. Let's get the latest reporting there with Ben Sills, Bloomberg Managing Editor for European Economy and Government. Ben, can you educate us as to what's happening in Paris right now?
Yeah, well, it's difficult to keep up, to be honest. We've got the headlines breaking on the terminal right now, just in the last few minutes. As you say, the far-right party of Marine Le Pen has come out and announced that they are going to vote to bring down the current administration. It's been a really dramatic few days. The Barnier government has been walking on thin ice ever since it was formed in September. Their lack of a majority in the parliament meant that Marine Le Pen effectively had the power of life and death over that government. Barnier has been desperately trying to get his budget through. Feels like every other day for the last week or so, he's been caving in to one demand or another. He's now, by my reckoning, given Le Pen 3 or 4 of the main demands that she wanted. She's still not happy, and so she's decided to pull the plug on the government.
Right, and by forcing it through, therefore, thus, a vote of no confidence can be called. Within the market, we are looking at a weaker euro. There's also been a lot of talk about how the difference between yields in Germany and yields in France, well, France and Germany, has blown out, and that it's at the level that we haven't seen since the European sovereign debt crisis back in 2012.
Wow.
It's an easy comparison to make, but it's very different when you look kind of under the hood at that.
Yeah, absolutely. So, I mean, the threshold that we were struck by last week was when the French bond spread actually went wider than the Greek bond spread. Those of us who were around 10 or 15 years ago, when the sovereign party, with sovereign crisis blew up, got used to tracking the Greek spread, but we never really thought that France would be in the same boat.
So where do we go from here? Where did the French go from here, and kind of what's the time frame here?
Yeah, that's a good question. I mean, I think that in terms of the kind of the next steps, we'll be looking for the no confidence vote to happen in the next couple of days. We would expect that to go through. That doesn't really resolve anything, though, because under the French constitutional rules, they can't hold another election until next July, I think. And so there's no way to put this to the vote to get a new kind of parliament there. So Macron is going to have the same complicated, divided legislature to work with. The parties are going to have to try and come up with a new agreement for governing. But I think everyone's going to be looking at Le Pen. She's setting the agenda here. She's the one who has decided to force the issue, and so there will be a certain onus on her to make the first move when we come out the other side of this crisis.
And one of the triggers for this was, of course, the snap election that sort of set up the government like this in the first place. Are we at risk of having that happen again?
Yeah, I think that, this is something that's been building for a long, long time in France. Le Pen has been a fixture on the political scene there for, more than a decade. She had her first presidential run against Macron in 2017. And so the French establishment has been coming up with a series of kind of increasingly creative ways to keep her out. But her stock is higher than it's ever been before at the moment. And you can see that by the way she's leveraging her power this week. The end game really centers on the 2027 presidential election. That's when Le Pen is really aiming to finally take power in France. The question is, does Macron hold out till then? There has been speculation in France that he might quit, but he's insisted he's not going to do that. So that means we're kind of in this sort of slight limbo situation where no one can really govern, but they can't force an election.
Ben, thank you so much for that reporting. Appreciate it. Ben Sills, managing editor of Bloomberg News. He is coming in from our Berlin, Germany studio on the latest news coming out of France. Some political instability right there. We're seeing that in the euro, which is off more than 1% here. 1.047 on the euro to the dollar. This is Bloomberg.
Welcome Reward Spesial untuk trader baru. Mau tahu gimana caranya? Yuk, simak.
Tickers page. First up, let's take a look at semiconductor tool makers. They're actually facing new restrictions on exports to China. The U.S. announcing new export controls to slow China's AI development, restricting 24 types of chip-making tools. According to Reuters, the tool controls will hit Lam Research, KLA, and Applied Materials. Despite that, though, you're actually looking at gains across the board here this morning. We're not seeing much of a reaction. I think maybe some of that has to do with the fact that some of these curbs were very much expected at some point, just in terms of the crackdown that we have been seeing, the back and forth going on between the U.S. and China. We've seen more and more geopolitical risk or the rising tensions being priced into these names. Of course, it will be interesting to see how exactly the new incoming administration is going to address some of these issues, whether or not we will see more aggressive rhetoric, more aggressive behavior, which is largely expected, I think overall it's fair to say, from the Trump administration, given some of that rhetoric that we heard on the campaign trail. But very much there is still a little bit of uncertainty surrounding just exactly what those policies are going to look like.
Yeah, absolutely. And to your point, Shauna, some of it has already been priced in. So whether or not we see a change, which is not necessarily expected, may already be priced into some of these stocks. Just to throw out the other side of things here, a spokesman over in China said that this order from the United States undermines the international economic trade order and could disrupt global supply chains. That has long been the stance of China in terms of these curbs on chip makers, that it could lead to global supply chain challenges. That has certainly been something that the U.S. is willing to overlook when it comes to the importance of domestic manufacturing from these chips names. We do know that the Biden administration has kind of had this large-scale effort, to your point, Shauna, to stymie China's ability to produce some of these chips and access them for both geopolitical and military purposes. It's been important to the U.S. to continue to have these rules here. I should also mention, though, Dutch and Japanese companies have been exempt from this ruling here, so perhaps that's why we're not seeing an impact on some of those names like ASML, for example. All right, well, we are also watching Tesla here offering more discounts and incentives in China to help meet sales goals before the end of the year. For the Model Y SUV, Tesla is offering 5-year 0% loans and a $1,300 discount. The Chinese EV maker BYD is also offering discounts on some of its models. Now, it's interesting, Shauna, we're seeing Tesla moving to the upside. I was hoping to talk a little bit about the upgrades that we got from Tesla this morning here. Craig Irwin saying that Elon Musk's love of Donald Trump could potentially double Tesla enthusiasts. That is a huge amount of potential customers here. And I thought this note from Stifel would be a dream for Elon Musk. They talked about how it's a full self-driving and AI company, quote, clearly not just an automaker. And I believe it was 2 quarters ago when Elon said, don't invest in this company if you don't think that we are a full self-driving company. If you think we're a car maker, then you should get out. So I'm sure he's loving that note this morning.
Yeah, I mean, these are very, very positive reports out here from the street, and that is really what is moving the stock this morning. We're looking at a gain of just about 3%. You're seeing some optimism surrounding Tesla. I love what you just said about the Stifel note. The analyst went on to say that the confidence in Tesla's auto business, significant value creation potential for the company's AI-based self-driving capabilities, as well as cybercab, really underpin the positive outlook on the stock going forward. Say that Tesla is clearly not an automaker, as evidenced by that current market cap. So I think that really just points to some of the optimism that we certainly have seen sweep surrounding Tesla ever since the election results that we did get. We have Musk obviously having a very heavy influence likely here in this incoming administration. Some saying that maybe this could be a distraction, but I think overall many viewing this as a positive here for Tesla going forward. But Roth MKM's analyst there, Craig Irwin, he actually hasn't had a buy rating. Previously had a buy rating on Tesla going back to 2019, but now expecting to see more of a rebound here in growth. And I think that's significant. He's come on the program time and time again, kind of just, I think more so just questioning maybe what the outlook looks like here for Tesla, can be critical sometimes. So again, just a bullish outlook here, more positive outlook, I should say, optimistic here from Craig Irwin is certainly worth noting.
Yeah, he raised the price target by more than 4-fold to 380, up from just 85 there.
Let's get to another trending ticker that we're watching, and that is Autodesk. The design software company beating third quarter earnings expectations last week, appointing a new CFO. The stock taking a dip on the back of those results, although we are looking at gains here this morning, up just about 1%. But you can take a look at that 5-day chart that we have and getting mixed reactions from analysts. HSBC downgrading Autodesk to hold, setting a price target of $290. But there were more optimistic takes out in the street as well. JP Morgan raising its price target to $300 from $245. You have UBS initiating coverage with a buy rating. And also Citi raising its price target to $361. Let's talk about all that and more. We want to bring in Andrew Anagnost. He is the CEO and president of Autodesk. Andrew, it's great to have you back here on Yahoo Finance. Sean. Good morning. So when you take a look at least at the street's initial reaction, maybe some disappointment, now we're hearing more from analysts, and they certainly are very positive just about what exactly your growth trajectory looks like going forward. I'm curious what you think is the biggest takeaway from the most recent earnings results, and really what that tells us about the demand we'll see in 2025.
Yeah, I mean, so first off, look, we beat on all key metrics, and we raised the midpoint of the guide on all key metrics, and that shows a lot of really solid momentum there. More importantly, and I think this is something that people are queuing into, is that in our high growth businesses in construction, manufacturing, and production, we've maintained consistent growth north of 20%, especially in the highly competitive area of construction, which is a huge growth opportunity for us. And all of this is really kind of driven by the underpinning momentum of people need our software solutions, our life cycle solutions to drive more productivity. I think I've told everybody again and again that there's a serious capacity problem in our industries, not enough money, people, or materials to build or rebuild everything that needs to be rebuilt and built sustainably. People need technology, and that secular shift is continuing, and it's only going to accelerate into the future. And that's what you're seeing with a lot of the upgrades. And you mentioned UBS initiating coverage at a 350 target. So there's a lot of optimism. Doesn't mean there wasn't turbulence, but there's optimism, and there should be.
One thing I'm looking at is the outside pressure from activist investor Starboard. Andrew, I'm curious, have you had any conversations with Starboard about what they're looking for from you in the quarters to come?
First off, we talk to all our investors, and we take investor feedback really seriously. With regards to any kinds of engagement with investors, I think it's really important to kind of talk about where we agree. And one of the things that we really agree with is that Sales and marketing productivity in the company needs to increase. And one of the big goals that we've had over the last 2 years is to change the way we engage with our partners and our customers so that we can drive more efficiency in our sales and marketing efforts. That's why we brought in the new CFO that we brought in. We're very much focused on internal optimization, particularly around sales and marketing. And that's an area that we agree with. And that's an area that's going to be a big focus for us.
I heard you say driving efficiency. What does that mean, Andrew? Is that AI? Is that layoffs? Is it something else?
Oh, it's a mix of everything. Look, efficiency is kind of in our DNA, but it comes down to a lot of things. Obviously, everybody's adopting AI to drive efficiency, but we've also changed how our business is working. So we've got all sorts of redundancies inside some of our organizations that we're going to realign and refocus on other types of things, lighting up self-service, lighting up more capabilities, understanding our customers more deeply, and enabling some of our channel partners to focus on lifecycle solutions. So we're looking at every option to make sure that we drive this optimization, but we've been planning this for a couple of years now, so we kind of know where we're going and we know what we have to do to get there.
Andrew, when you take a look at your billings growth, it was 28%, very impressive. I guess my question is, what does this tell us just about the progression here of your new transaction model and how much momentum we could see in the quarters to come?
Yeah, so Shauna, what you're seeing there is the results of 2 years of hard work. Mm-hmm. That billings growth is the result of the movements we've made from moving from billing annual multi-year contracts up front to billing them annually, and the new transaction model. So what you're seeing is building strength as a result of the changes that we made in our business. And you can expect to see more strength building. We reaffirmed our free cash flow target for next year, which is even a larger target than what you saw this year. So you can expect to see the compounding effects of the things we did over the last 2 years really show up in the business.
Andrew, I'm curious just to get your thoughts on the incoming Trump administration. Lots of talk within the industry just on what ultimately it means for the business. Are you adjusting at all, just in terms of your expansion plans or how you're approaching the next 4 years?
So there's a couple of things. One, I agree with one of your earlier speakers. We just got to wait and see what happens. There's always a lot of talk. But what's really important for our business has really bipartisan types of issues associated with it. Infrastructure is a huge bipartisan issue, and investing in infrastructure globally within the United States, it's something that gets support from everyone. Building housing is a big bipartisan issue. It's something that gets a lot of support from lots of different parties and lots of different constituencies. So when we look at the changing administration, we don't see a lot of change in the things that are really important to our customers. And when it comes to some of the things that are being talked about right now, I really do think we need to wait and see what actually happens versus all the posturing and positioning that's going on right now.
Andrew, that's so interesting because you talk about construction, obviously a critical part to your business, housing going forward. We've heard the incoming administration talk about that as well. I guess my question is, do you see it being as big of a priority as it was under the Biden administration?
I think infrastructure will continue to be a priority. I think domestic manufacturing will continue to be a priority. Mm-hmm. And what that will continue to mean is an investment in manufacturing capacity inside the United States. How that investment happens is likely to be different, but the passion for those challenges and the focus on those needs is going to continue. It's just probably going to have different hows in terms of how they approach these things.
All right, Andrew, we got to leave it there. Thanks so much for joining us. We appreciate it.
Thank you so much.
Coming up, we're taking a look at the top 5 trends for commercial real estate in 2025 and going deeper into today's ISM manufacturing data. All that next on Catalysts.
This is my salary for my online job that I have.